Welcome to the deep dive.
Good to be here.
Today, we're digging into refinancing your Australian home loan. We've got an article here, and our goal is to pull out the really impactful ideas.
Yeah, the stuff that could actually, shift things financially for you.
Exactly. These aren't just small adjustments. The article suggests some benefits could save you serious money or help you hit big goals much faster. Okay, let's get into it.
Sounds good.
Okay, so the first big one the article mentions, probably the most common reason people refinance is just getting a lower interest rate. Seems obvious, but what's the real impact there?
Well, that's where the numbers really stand out.
Yeah.
The article highlights that even what seems like a small reduction, maybe 0.5%, 0.75%,
Yeah.
it doesn't just shave a bit off your monthly payment. Over the life of, a typical mortgage, that adds up massively.
How much are we talking?
Potentially tens, even hundreds of thousands of dollars in interest
Yeah.
you just don't end up paying. It's significant.
Wow, okay. That difference over the whole term is huge. And the article touched on using that monthly saving, right? Not just pocketing the cash.
Exactly. That's a really key point it makes.
Hmm.
Sure, lower payments help the budget now,
Right.
but the article points out if you get that lower rate, but keep your repayments the same as before,
Paying extra off the top.
precisely, you can slash the loan term, like really cut it down. You could take years off your mortgage, maybe even, a decade or more, depending on the numbers.
Right, so it's not just saving cash month to month, it's potentially becoming debt-free way sooner. Okay, what else did the article focus on? What other big benefits?
Another really crucial one is getting rid of lender's mortgage insurance, LMI.
Yes, LMI. That fee the bank charges if you borrow more than 80% of the property's value. Protects them, not you. Right.
That's the one. And it can be thousands up front, a real sting.
So how does refinancing help with that?
Well, the article explains that maybe you've paid down a chunk of your loan already, or maybe your property value has shot up over the years. So your loan-to-value ratio, the LVR, might now be naturally under that 80% mark. The article mentions someone, Sarah, I think. Her LVR dropped to 66%.
So when she refinanced?
No LMI needed on the new loan. Because her equity position was strong enough, it's a cost you might just avoid completely second time around.
That's a pretty big saving right at the start of a new loan. And speaking of equity, that was another major theme in the article, wasn't it? Using the value you've built up.
It really was. Refinancing is often the main way people access that equity. That's usually called a cash-out refinance.
So how does that work?
Basically, you borrow more than you currently owe on the mortgage. The lender gives you that difference in cash. You're turning that sort of theoretical value on paper into actual funds you can use.
And the article had some concrete examples of what people do with that cash, right? It wasn't just theory.
No, not at all. Home renovations are a huge one. The article mentioned expats, James and Olivia, used equity from their Melbourne place for big renos. Probably boosted the value too.
Makes sense. What else?
Another really smart use mentioned was funding a deposit for an investment property. So instead of draining your savings...
You use the equity in your home to buy another asset.
Exactly. Leveraging what you already own to build more wealth. It's a powerful strategy.
Very smart. Okay, what was the fourth key benefit the article pulled out?
Consolidating other debts, especially high-interest ones. Think credit cards, personal loans.
Yeah.
That kind of thing.
Right, the ones that often have much higher rates than a mortgage, so you roll those into the new home loan.
That's the idea. The article used Mark's example. He folded those higher debts into his refinance. The win is twofold, really. One, it simplifies things. You've got one payment instead of juggling several. Two, and this is key, you're paying the much lower home loan interest rate on that debt amount.
So potentially saving a lot on interest over time compared to keeping those cards separate.
Potentially, yes. But the article rightly adds a note of caution. That debt is now secured against your house, and you'll be paying it off over the much longer mortgage term. So discipline is needed.
Got it. Good point. Okay, so let's quickly recap the main takeaways from the article then.
Sure. So refinancing can mean lower interest rates, saving you money monthly and heaps long-term, potentially ditching LMI if your equity's grown, accessing that equity for big things like renos or investments, and simplifying finances by consolidating other debts at a lower rate.
It definitely paints refinancing as a powerful financial move, but the article also stressed knowing why you're doing it and watching the costs, right?
Absolutely critical. Things like discharge fees, maybe break costs on your old loan. You need to make sure the benefits genuinely outweigh these costs, just as the article says. It's about being strategic.
So thinking about that equity point, how might that ability to access, potentially large sums tied up in your home actually change your future plans?
That's a great question to ponder. Could it fast-track that renovation you thought was years away?
Or maybe make buying that investment property suddenly seem feasible?
Or fund something else entirely, some other big life goal? It really can shift the timeline, can it? Makes those maybe someday ideas feel much more, well, possible now.
Yeah, it turns potential into something concrete.
Definitely.
So, if you're an Australian expat listening and thinking about these possibilities, exploring your options with a specialist, someone like Odin Mortgage, could really help clarify what's achievable for your specific situation.